this was mentioned briefly by our good friend Markets and Mayhem yesterday. Didn't really talk about it. I'm curious to get the reaction here from the group. There's no question about that. Volatility Shares, a pioneer in crypto-themed ETFs, has submitted a filing to the U.S. Securities and Exchange Commission seeking to roll out a line of extremely levered products, such as the 5X ETFs that follow Bitcoin, Ether, Ripple, and Solana, as well as volatile stocks like Coinbase, Strategy, Tesla, and Alphabet. Who here is excited for 5X levered products? That's what I want to know. Who is getting ready to trade these things? As if the 2 and 3X products weren't enough, now we've got 5X products, and they're doing this on the back of things that are volatile like crypto. That should be fun. Day trader, I'm definitely interested in what you think this will mean. And also, is stuff like, I know that you're actually into the crypto itself, the underlying asset, but are any of these interesting to you? If sanctioned, the suite would consist of 27 products across 3 and 5X leverage levels effective as of December 29th, marking them perhaps the riskiest crypto-tied products offered to American investors. Reactions to this reflect the unbelievable nature of the bet. Quote, nothing like this has been approved before, and it probably won't go live. But I mean, if it does, the ETF space will get crazy, end quote. That was from an X user there. SA3X says, I'm already sweating. Day Trader says, I trade crypto futures with 25 and 40X leverage. So this is much ado about nothing for him. Barry the Goat says I'm in. Oh, this is going to be fun. This is going to be fun. For anyone that wants to track this or go through some of the tweets, let me throw the story here in the chat. You can go ahead and add any of these to your watch list if you'd like. A 5X leverage ETF amplifies price swings on a daily basis by 5 times. In reality, a 2% swing in Bitcoin, which it does basically just on the regular, a 2% swing in Bitcoin or Ethereum might shift the ETF by 10% one day up or down. Daily rebalancing required to maintain the leverage level brings its own set of risks. Every night, the fund purchases after profits and sells after losses. This can accrue against investors over time in choppy markets. Even if Bitcoin ends the week up, a 5X ETF may lag due to these nightly resets, especially in illiquid assets like Ripple. So this paragraph right here is saying that, at least at the beginning here, and Day Trader, I would lean on you with some of your experience trading some of these higher leveraged products. This to me seems like they're saying, yeah, there's actually some increased risk simply by holding the ETF overnight. During the day here, these might make great day trading vehicles, especially if Bitcoin is just moving modestly. These here could be moving double-digit percent. So definitely good day trade targets, but they're basically warning you here that even the nightly rebalance might cause your position to go more against you. And then Day Trader here, I like this. Based on that paragraph, I have zero interest in that. So it sounds to me, Day Trader, like instead of venturing down these levered ETF roads, you're just going to stick with the actual underlying asset, which you've been doing for what, how many years now? So pretty much ado about nothing here for you. You're just going to stick with that. Kind of makes sense. Anyway, if anyone does mess around with these, I'd like to hear about it. If I do, I'll for sure let you know. The filing does not happen in a vacuum. U.S. markets have come close to dramatic leverage previously. 4 shares have offered 4X ETFs in 2017, temporarily receiving SEC approval before the action was reversed, while Velocity shares 4X currency-linked exchange-traded notes were closed in 2020. European markets have experience with 5X leveraged offerings, yet their uptake remains niche compared to this prospective U.S. demand. Now, existing SEC regulations under Rule 18F-4 provide guardrails on leveraged funds employing derivatives, with risk managers being required to estimate the value at risk, or VAR, to restrict excessive losses. While the rule offers substantial room for discretion, permitting firms to stretch the limits provided VAR calculations are set within limits. The filing comes in the back of crypto markets recovering from an unprecedented $19 billion liquidation event earlier this week, highlighting the highly volatile environment for such outsized instruments. For investors, Velocity shares' aggressive approach is both tempting and perilous at once. While upside potential is high, danger of quick compound losses mean these 5X ETFs are appropriate only for high volatility tolerant investors or those with financial thrill-seeking bent. So there you go. We got a poll up here. Thank you, producer. 5X leverage ETFs. Can't wait to trade them or too much risk for me. Get your votes in. Appreciate you, producer.